Moada here. Again, we want to take a look at what happens when the opposite happens. Remember, we've been talking about the RSI mountain whenever stocks move above 69.10, and we are talking about this move, and when the stock stays above that level, why you should stay in the stock for as long as possible, even though it does not make sense from a normal trading standpoint whenever the stock is trading in this level on the RSI. And I want to talk about the flip side of this is when stocks are trading with their RSIs trading below 30.90. And you can check out my videos on these two topics here, on the 69.10 and the 30.90. As an investor, you do need to understand these levels. As you can see, most charts are going to give you 30 and 70. Whoops. And 70 as the levels to watch, but this is actually the true levels, and I explain to you why they are. But 30 and 70 is close enough, so we'll take those. Anyway, so we want to take a look at what happens when the mountain is below 30.90, in other words, the inverse action. And what you're going to notice here is that, let's take a look at UNG. Once it moved below 30.90 there, it stayed below that level until it reached. Now, most people would think that this is a time to buy a stock because the RSI has been misrepresented as being an oversold and overbought indicator. I don't think it is. In fact, it is not. What you see here is the RSI is a measure of sentiment, and sentiment moved below 30.90 here, or 30.90, and this was a time to get out. This was when the stock was trading at about 33, 32. It would go on to lose as much as more than 50% just because it stayed in this inverse RSI mountain. So avoid stocks that are in this area. Maybe the time to go back in, if you want to do or take your chance for a rebound, is wait for the stock to come back above this level here like it did here. It moved back above 30.90, and you can see it made a low there. So that's maybe the time you can do that. But when it's trading in that level, that's not the time to go long. And usually most investors get trapped by this, buying stocks when they're oversold, thinking that the next step is for a bounce. You have to be careful where you are buying these oversold stocks. Let's take a look at UNG from a monthly view, and we are looking at the stock from a six-year monthly chart. Now notice what happened. The RSI went below 30.90 on the monthly time frame, which is at a split adjusted price, I believe, of 175 in 09. This is when it moved below 30.90, and notice how it stayed in this general area. In fact, it stayed below 30.90 for the next 1, 2, 3, 4 years. And that was enough to take the instrument from about 175 all the way down to as low as $12, $13, $14. And it's only until recently, when it started to move back above 30.90, that it became a tempting buy. But when it's trading in this mountain here, inverse mountain, you do not want to even attempt to lose yourself money. So it also works, as we can see, on the inverse. The mountain is legit even when stocks are on sell-off mode. Let's take a look at another one here. Now notice this instrument, FAZ. This one has split so many times, but the idea is the same. The RSI began showing here when it was way below 30.90, actually at a level of about lower 20s or mid 20s, and that's from a split adjusted price of, let's call it, about 375 here, which is this level here. Notice that the RSI has stayed in this level since 2010, and the stock has gone to trade as low as 25, from 375 to 25. So this has been a losing proposition over the last 4 years, and you could have avoided this stock if you knew about the Moada's RSI mountain. In this case, it's the inverse, staying below 30.90. is not a place where you want to buy stocks. Let's take a look at AMR, and you'll notice that it moved below 30.90 here on a weekly time frame, which was this break of this level here. So that was a time to get out. Even in price, it was a price break there. RSI moved below 30.90 and the stock was trading at about 550. It would go all the way to trade as low as 4 or 5 cents, maybe even lower than that, about 3 pennies or 30 cents. Amazing drop. And it stayed below this level here, generally staying in this level for many months, and you did not need to touch this stock. It's only until it recaptured this level here that it became an interesting proposition. And it did move from about a breakout of under 70 cents here, 50 cents, all the way to $7. So for a nice move. Now the monthly shows you that ever since the stock broke down here at a price of 250, the RSI on the monthly went to below 30.90. It stayed in that 30.90 and below for the next couple of months, and it's only until it moved above 30.90 here from 250 all the way to about 30 cents here. That's a big drop, almost losing all your money. And it's only until it recaptured the level back above 30.90 here that it became a buy. So the idea here is we are learning about the RSI mountain being in this area. You don't want to touch a stock in that area. Let's take a look at one more chart here as an example. Now the solar stocks were massive underperformers in the market over the last couple of years, even though they've come back to life lately. But I want to show you that on the monthly, while the markets were making all-time highs, solar stocks broke down in price. This support failed. They moved to fresh lows here. The RSI moved below 30.90 here and stayed in that general area from a price of about 55. It would drop all the way to the lower teens. Let's call it about $13, $12. And it's only until it moved above that level here that they were a buy. The RSI mountain was here, the inverse RSI mountain, and there was no need to touch solar when it was trading in the 50s, no need to touch it when it was trading in the 40s, in the 30s, in the 20s, in the higher teens. It's only until it moved above here that you would have considered it a buy. So those are the examples on the inverse Moade RSI mountain. Good luck to you guys. Again, like I said, just sharing here so we can all try and beat this amazing market. Peace and blessings. I am out for now. Woo!